Hello class, welcome to part 5 video for your chapter 5 FA1, and this will be the last video for your chapter 5. And in this video we are going to learn a concept called revaluation of your land and property. So what is revaluation? A company can choose to revalue its asset. The main reason of revaluation is to reflect the fair value of the asset in financial statement. The definition of fair value is the agreed price between the willing seller and willing buyer. The company may need to engage qualified valuer to determine the fair value of an asset. So we can say that fair value is the market price because what? Because of willing seller and willing buyer. Normally, when we record the land and property value in our record, we'll be using the cost. So revaluation gives a chance that the company can adjust the asset from its cost to the fair value. Accounting entries in fair value: when there is an increase in the fair value of the asset, we debit the asset account and credit to revaluation reserve account. Revaluation reserve account is used to capture the additional value, increase in value of the asset, and revaluation reserve account is an equity in statement of financial position. When there is a decrease in fair value, we debit the revaluation reserve account and we credit to the land and building account. So we use one exercise to practice the concept in revaluation account. Classroom exercise 5.6. Super Venture Limited has a piece of land. In the company statement of financial position as at 31st December 2015, the value of the land is recorded as 300,000. So this 300,000 is the cost of the asset, which is the cost of purchase. The director has decided to revalue the land based on the fair value. The following is the fair value done by qualified valuer in the year 2016 and 2017. So at 31st December 2016, the fair value of the land is 500,000. This fair value is based on the average selling price on recent transaction in similar areas. At 31st December 2017, the fair value of the land adjusted to 450,000. The reason of decrease is due to economic downturn. So we are required to prepare the following account for 16 and 17: land account, revaluation account, and revaluation reserve account, and lastly, abstract statement of financial position. So we start from recording the opening balances. So we are doing for 2016. So on 1st of January, the value brought down is 300,000. And at the end of the year, the value is increased to what amount? It's increased to 500,000, right? So class, tell me, cost 300, fair value 500. So these changes is increase or decrease? If increase how much? Or decrease how much? So from 300,000 to 500,000, this is increase in the fair value, and the increase amount is 200,000. So we look at the text. If increase, we debit the land and building account and credit to revaluation account. Take note, when you record this transaction, you only record the difference. You only record the difference between your cost and fair value rather than fair value. If you record the fair value, then you will get a wrong answer. You only record the differences. The differences is 200,000. So we debit the land account, revaluation reserve, and we credit to revaluation reserve account. So we write land. So that's all for 2016 transaction, and then we do the closing for account. So the closing value is 500,000. It means that this land has been adjusted to the fair value. And this amount will bring to next year. Similar to your revaluation reserve account, revaluation reserve is an equity. It's an equity. So we have to use the same method to do the closing. And this amount we will bring to next financial year as well. So we have complete 2016 transaction. And let's compute the 2016 transaction. So the header is assets, non-current assets. So we write land. The land value has changed to 500,000 and no depreciation for land. Why no depreciation for land? Because land has an infinite useful life. Land is having infinite useful life. It means that it can last forever. Okay, infinite. That's why no depreciation for land. And then under the equity, we have revaluation reserve. The value of revaluation reserve is 200,000. So that's all for 2016 transaction. So we can continue to 2017. The 2017, the fair value has been adjusted to 450,000. So meaning that now your book value is 500. The latest fair value has changed to 450. So what is the direction of these changes? The answer is decrease by how much? 50,000. So textbook, it say that when you have a decrease in your fair value, we debit the revaluation reserve account and credit to the land and building account. Debit the revaluation account. We write land 50,000. Remember, we only record the difference. So in your land account, we credit. After that, we do the closing. The balance CD become 450. And this amount we will bring to next financial year. And for your revaluation account, the balance CD is 150. And we will bring this amount to next financial year. $150,000. So that's all for the ledger. and then we reflect this to our statement of financial position. Your land value changed to 450,000. Net book value is accumulated depreciation is 0, so your net book value also 450,000. Your revaluation reserve, the latest one is 150,000. We follow the balance CD. Okay, we follow the balance CD to get the amount. So that's all for your classroom exercise 5.6. So we have complete all the classroom exercise of 5.6, and for the practicing for the online section, we will do home exercise 5.1 together. And if you have any question on the revaluation of land and property, you can leave me a message through MS, or you can ask me by email or in the comment function of YouTube. So that's all for chapter 5. Thanks for watching.